Welcome to the WealthGenius Podcast. The WealthGenius Podcast. Strategies for multifamily real estate investing, mindset, community, success. The WealthGenius Podcast with your host, the godfather of real estate, Alfonso Cuadra, who has expansive experience in business and massive success as a real estate investor. The WealthGenius Podcast. Let's dive into today's episode.
Cody Yeh. What's going on?
What's going on, Alfonso?
Yes, sir. Thank you for coming by. Like I was telling you before we started filming, I'm going to put myself in a position of a student, right? Of someone that needs to know about this stuff because I'm a real estate guy. I'm the real estate guy. You're the stock options guy. And it's always like, I want to learn. I like to do some stock options. It looks fun. But when I start thinking about it, it just becomes complicated in my mind. Mm-hmm. So pretend I'm like a 12-year-old, okay?
Mm-hmm. Yeah.
And, I want to go, I'm obviously, being a little bit comical there, but I want to get into your brain, because you are the stock options guy, right?
So far, yeah.
No, you're the guy. You're the
guy.
The guy. And I want to know kind of what makes you so successful in that game. And how you came to even be in stock options in the first place, because most people look at the market as like, oh, I want to get in the market, and
mm-hmm.
they go to maybe a broker or they go get a self-directed account and they start trading,
mm-hmm. Yeah, start gambling.
Yeah, start gambling.
What people call, yeah.
Yeah, because they don't know what they're doing. So before we get to all of that, kind of bring us up to date. What do you do? How do you do it? And, what's your daily activity?
Okay, cool. Well, that's a loaded question. So first of all, my name is Cody Yeh. I started investing in stocks in 2011. I came to this country, Canada, at the 2009. So I started in second year of university. I might look younger than what my actual age is, and I tend to keep it that way. But then throughout the years, I invested in stocks, and I was a day trader 2015 to 2017. And meanwhile, at that time, I was working full-time. I graduated as an engineer from the University of Toronto. And I was working as a second job, trading in the Asian market. Right now, that looking back, it was crazy. But at that point, I was trying to prove something. Like all the engineers, we're very single direction brain. We just want to prove something. If someone else could do it, we could do it. Right now, looking back, not the most efficient of time and not the highest win rate, right? And that's why 2018, that's when we start stabilizing our stock option investing strategy. And hence we have our fast money, medium money, and slow money. Just like in real estate, you can have your wholesaling, flipping fast money. You can have your BRRRR, medium money. You can have your buy and hold, slow money, or private lending, all that good stuff, right? So we have that established since 2018. And that's when, going all the way back, we make a lot of mistakes. Like we have lost money on stocks because we were one time thinking that we were better than Warren Buffett, right? And then the more books that we read from Warren Buffett and Charlie Munger, that we found that there's reason why they were so successful in the long term. There's reason why they don't treat stock investing or stock option investing as gambling, because they have something that is so simple, so, lack of better words, so boring, but it's worked consistently, right? So we attract a lot, we draw a lot of the insight from that and make a modified version for what works for myself and thousands of my students. So
I can get on board with that, because in any industry that I've seen, the people that are least successful are the people that are flipping, right? Like in real estate, I want to be a flipper. I want to make millions of dollars, and there's always like the get rich quick. And when you look at Warren Buffett's strategies to simply buy and hold is basically what, if you can do that in any industry, like buy, if you want to be in Bitcoin and you want to be get in, get out, get in, get out, get in, you're not going to be successful. The people that are successful is like, okay, let's have a long-term plan. Let's do this long-term, buy and hold. And so what got you attracted to stocks in the first place?
Because when you're second year in university, you don't have a lot of money. I can't go and buy real estate. At that time, I was still an international student. My tuition fee was $30,000. So I want to be like other people that go and work part-time. But with a visa, you can only work 10 hours, I think around 10 hours per week.
So you got to maximize those hours.
So I'm like, should I just focus on learning more, or should I go get paid minimum wage and learn a little bit? So at that time, I picked just maximize on learning everything. I was like, so like, I don't know if you know, but engineers' schedules are very packed in school. We have a maximum of 6 courses each semester. I cannot take on any more. But at night, I go sit in on accounting, corporate finance, investing, corporate behavior, all those courses at night until the professor know me and don't kick me out anymore. I'm like, wow. I promise I won't talk. I won't eat.
So you were taking your course, you had your course load.
Yeah.
And then you decided, okay, on my spare time, I'm going to go to all these other courses.
Yeah. At night, I just asked my friend, hey, I saw you sign up for that. What's your timetable look like? I just go. And it's free, right? I already pay for it. I pay $30K per year. I might as well maximize it.
Yeah.
Right. So that's where we started. And then soon I realized that school don't really teach you the real strategy. They teach you everything. They teach you the things that the computer can do. For example, if you go to when school teach real estate, they teach you everything about, how do you do appraisal? How do you come up with this? But they don't tell you the strategy. How do you make money in real estate long term? Same thing in stock options.
Well, and I would have to say, because in order to teach something, you kind of have to have done it. Hard to teach something that you don't believe in or you've never done.
Yeah, so I always love the guest speaker that they bring in from the industry.
Yes.
And that's where I learn the most. Whenever there's guest speaker, I go and I ask hard question, right? Instead, no offense to all the professor, but a lot of time the professor is teaching something that they don't have real experience in, or they just have a little bit of it. So I like the professor has not just put their name on a company, but the actual advising and put their money or skin in the game if the company goes up or down. So I respect those people a lot more early on. And that's still today. I only listen to people like yourself. When I ask people about WealthGenius, I'm like, who should I listen to, right? I work for the mortgage broker that kind of help a lot of your people too. So I know, the names that I know I can fully trust because the mortgage broker trusts them because they see everything, right? Yeah. I was telling everyone, between mortgage broker and my accountant, each of them I'm half naked. If they talk to each other, I'm fully naked.
Nice. So 2011, you start getting into the, was it just trading? You're just doing trading?
No, that's just boring investing, like bank stocks.
Yeah.
Right? And that time, like index funds, like mutual fund was still
Are you
big.
making money at this point?
It's like boring money. It's like, 5%, 8%. I'm like, that's got to be something faster. You put in 10,000. Oh, that's too slow.
Yeah.
That was
and
too
so
slow.
how did you get introduced to stock options?
Yeah. So before that, I was day trading. I met my day trading coach through a friend that introduced me to day trading coach. So she's from Taiwan. She doesn't have any social media, no marketing, right? Because she was taking people's money kind of through exemption. I don't know if she has the right structure set up, but I was looking at her trading live. She was 24 years old. And she was driving a Rolls Royce. So when you're like 23, 24, that's how you equate to rich or being wealthy. Is that, this girl is 24 years old driving a Rolls Royce. That must be something. She was managing $50 million. Why would someone trust her? So I was trying to learn it. In the beginning, it was, we're losing money the first 8 months. I was yelling at my coach, like, what the hell? I learned from you. You're successful. I'm not. Why? She said, Cody, this is part of the process because this is not for normal people. So I didn't, after a year, we were up. Second year, I'm still up, but I'm like 5-6 hours per day. This is way too much, right? So I kind of stopped doing that and say, how can I spend my time on something that can generate me the most amount of money with the least amount of stress? And that's why we start stabilizing the stock option. And that's where we get into, reading Warren Buffett stuff, Charlie Munger stuff, like what do they know that I don't? And that's where we get introduced to the selling option strategy.
Yes.
We're kind of like an insurance company now. Yeah. We're like the casino.
Well, I want you to explain it to me like I'm 12 years old, okay?
Yeah.
Stock options, it's not trading.
Yeah. Well, I only make 1 to 4 transactions per month.
Okay.
So in the CRA's world, I'm trading, but truthfully, it doesn't take much time.
So do a lot of people do this?
Also, hundreds of students paying high ticket for it, 1,000 students that go
no, but I'm just saying, like,
level.
generally, like, because it's not something that is talked about. When
Not-
you hear,
not that much,
When
no.
you watch, like, any, like, I watched what's that movie? The
Wolf of Wall Street.
Wolf of Wall Street or whatever, or
The
there's
Big Short.
There's the other one is Ballroom, or no, Boiler Room.
Boiler Room, yeah.
It's like trade, da 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 da. It's like, it's so
Yeah.
exciting.
Yeah.
It feels like there's a adrenaline. Is that what stock options? Do people know about stock options?
I think a lot of people really think stock investing or stock option investing. Like, that's why I don't like to use the word trading, because I'm really not that active. I only spend 30 minutes per week. Right? I have all my coach reading everything, analysts. So I just look at the data. I make a decision if I need to make a decision, if I want to make a decision. But most people who got drawn to stocks, like, this is how we screen people, whether we know they're the right person, is if they're here looking for the adrenaline, if they always feel I need to do something, if they don't do something, something's wrong with them. Those are the people that usually have that gambling mentality, and that we're very careful with that. And that's not what we do at all.
Yeah.
We want people to be boring.
Go play a sport or something.
Yeah, that's what we said and done. So imagine you can buy a real estate deal. You put in offers, like, this is my offer, and you get paid to put in an offer.
Wow.
And then if you don't come down to that point, I'm not buying it, but you're still paying me money.
Wow.
That's
Okay,
like-
hold on a second.
That's the whole point of it.
So please. So what is the function of options, stock options, and how does it work? Like,
Yeah.
what is the function? Is it like I'm hedging against potential up or down, or how does it work?
Yeah, so option is very different than stocks. Stocks, you want to buy low, you want to sell high. Your profit is different, just like real estate buy and hold. Very seldom people short the market. That means they think the market will go down, so they sell the stocks, thinking it will go down, and then buy it back later and profit the difference. Alfonso's like, a lot of question mark. Now, stock option.
Well, I'm thinking of GameStop.
Yeah, GameStop.
You know what I mean? Like, I'm thinking of, like, how did they, someone obviously hedged against a loss, and then you had, excuse me for my ignorance, because I don't know exactly what happened, but this is my my perspective of it. You had all of these people that have influence that said no, they drove it up, even though, based on the P&Ls, like the profitability of the company, it should have went down. So someone made a hedge against GameStop, and other people just drove it up.
Yeah, like, we can quickly get into that for 1 minute. So the GameStop, what happened there? You were very close to the point. So basically, it's an open book. Everyone look at the financial statement of GameStop and say, this company is not making money, so we're going to beat them up. All the hedge fund is like, we're going to beat them up. We're going to short selling on that. We're going to bet that the stock will go down. Well, it makes sense because the financial is really bad. And then these Robinhood or Reddit traders come on and be like, you know what? This is the first time ever we can get it up on these hedge fund managers. Yeah. So why not we all gain up and go buy the stock and push it up?
Wow.
And the more they push it up, the more these hedge fund managers have to cover their position, because every price that goes up, they are losing money, and the stock price can technically go to infinite.
Yeah.
As it go down, can only go to zero, but going up can go to infinite. So they were so scared, and they were covering the losses.
Wow.
The more they cover means that the more they need to buy. The more the stock goes up, the more they push.
So what would you do in that strategy? Like, what would you do if you were in that position?
I never touched GameStop. We never touched GameStop.
So, okay, let's go back to explaining what the stock options
Yeah.
were.
So going back to stock option, the whole difference between stock option and stocks is all about price. There's nothing about timing.
Yeah.
An option, it has a different dimension. There's the expiration date. You can predetermine a price, and there's an expiration date. What that means is that if you think Apple will go up, you can say, hey, I buy a contract. I pay a money for a lottery ticket. I think Apple stock will go up by $5 in 1 month. If it goes up by $5 in 1 month, I will make money. Otherwise, $100, I pay it to the option seller, or I pay it to the
So
OLG.
if it doesn't go up, you just get your money back.
No, you give your money to OLG. I bet that will go up. If it doesn't go up, that's only the $100 I lost.
Yeah.
But meanwhile, our strategy is mainly focused on being the OLG or the casino owner or the option seller. This is where Warren Buffett is standing at, right? If we say we want to own a stock, let's say I want to own Apple. Right now, let's say it's $150. I'm like, you know what? I want to own Apple at a cheaper price. Just say you want to get an off-market deals in real estate. I'm okay owning at $130. Historically, that's been a low point. Seems like there's a strong resistance or support there. Okay, I sell an option to say, if the Apple stock price drop from 150 to 130 in 30 days, I will buy Apple at 130. But you're going to pay me hundreds of dollars up front. Why? Because I'm the insurance broker. I sell your option contract. Someone bought that.
So this is something very important that I'm discovering. You're not the one making the bet.
I'm the one I'm one taking the bet.
Okay.
We're like an insurance. We're just like an insurance company.
Wow.
We sell you a contract. We get paid a premium.
And so
right?
Anybody can put themselves in that position?
Yeah, anyone can.
Wow.
With the right permission, you know what you're doing. Yeah, you can.
Yeah.
Right. And that's what we're doing.
Wow. Okay. The house always wins.
Yeah. So and so that's why when I talk to people, we have 95% win rate on individual stocks.
Yeah.
We have higher win rate with S&P 500.
But this is an important point that you've just made, because I've always thought about stock options, and it was maybe like my ignorance that said, "Oh, this is how that works," and what you just explained to me, what you've just explained to me is completely different than what I thought. And it brings a lot more clarity and security.
We want to be on the winning side.
Yeah.
And that's how we win long term, right? We're at 95% win rate. Okay, if we lose 5% of the time, so be it.
Yeah.
We know what's a worst case scenario. Right?
How many trades are you doing at one time? Or how many, how many options should you have out there?
I mean, just like real estate, our stock option strategy is comprehensive in the way that we have the slow money, where it's buy and hold. So I think a few days ago, I just took a screenshot of my tax-free saving account. I didn't do much. Those are buy and hold. 40% year over year. I don't know if you guys see that. I think a lot of people saw it. I'm like, I didn't do much there. Okay, my active account, where I make about 1 to 4 trades.
So everybody should have these pots.
Fast, medium, and slow money. Separate the money. Just like in real estate. You should know your goal going in.
So overall, you're going to get a return, because this might not go as fast, but it's more secure.
Yeah, so we have fast money.
Yeah.
Where we, more like flipping, wholesaling.
Yeah.
And then we make our active income there to replace our income or replace your wife's or partner's income there. And then we have our medium speed money, kind of like Burr. Take a few months. Sometimes it could take years. We might get stuck on individual stocks that we want to own, or selling options on it, only at a cheaper price. And then there's our buy and hold of buying index, or just buying stocks like Apple that Warren Buffett put 40% of his money in. So we have fast, medium, and slow money. Sometimes the fast money might be slow. Sometimes,
And so what's the percentage of money that I should allocate to these
Everyone's kind of
buckets?
different though.
Yeah.
Some people come to me as like, Cody, I have $6 million. I want to replace half of my income because, I work in a hospital, work in a clinic. I want to replace one of it. I'm like, okay, we reverse engineer. I'm an engineer. I reverse engineer the number based on that number. Okay, this is how much you put in that. The rest, put in more passive, right? Just buying index, depending on how active they want to be, right? But usually I have 3 buckets: fast, medium, and slow money. So when one stop working, what temporarily not working, doesn't mean it doesn't work on the long term. Always work on the long term, but it will balance out. Right? Just for example, like real estate, when the interest rate is high, everyone's like, Airbnb, we get more cash flow, right? But is Airbnb a better long-term strategy? Debatable. But in the meantime, your fast money might work better because of that, right? But if you always have 3 different buckets, you have equity building for the slow money, you have some burr going on, you have some fast money, you're more invincible to any of the market movement, right?
And so what's your favorite thing about stock options?
It doesn't cost too much time. It only took me like 30 minutes per week.
30 minutes. So what do you do the rest of your time? 30 minutes per week.
So I didn't start with that. I used to be that guy.
How much time did you put into it at the beginning?
Lots of it.
Because you wanted to learn the ins and outs.
Learn the ins and outs and go through the mistakes. I have 4 coaches now. And to be my coach, you have to make 20% year over year for 1 to 4 years in a row. That's how we qualify them. Then they have to know how to coach, and I have to trust them with my student, right? So it's very strict criteria, but really in the beginning, you're going to put in like 10 to 20 hours just to learn it. Why? Because we dumb it down so much. We have 70-year-old students, 4 of them. Right? At first I say no, but they were like, Cody, I'll prove you wrong. In 6 months, I'll be a case study. Get me on your podcast. I'm like, okay. 4 months in, she's doing it well. So that's how we know that they really stress test us to dumb it down by so much. So now we're very confident and say that 10 to 20 hours to learn our fast money and go from there. And you can slowly learn our slow, medium, and slow money if you have other money that you want to, boost your return instead of just put in a mutual fund that make 5 or 8%, right? So they have the whole package of things. But to learn our flagship strategy has been featured on TD Bank, 10 to 20 hours.
And what's the hardest thing about what you do?
About what I do as a student?
Not just in the stock options world. What has been the most challenging, or something that you had to overcome, something that would be challenging for someone that is trying to get into the game?
I think the challenging for someone to get into the game will be really being coachable. Because now that we screen people very crazy, when people come in and say, Cody, this is my last $10,000. It better work or I'm going to jump the bridge. I'm like, dude, this is not the right fit.
Oh, man.
I want someone to say, you know what, Cody, I don't need to see this money 5 years, but hey, I'm trying to replace my income. Do you think this...
Scared money never makes any.
No. Yeah. Because the moment something happened, they're like, oh, your coach taught me wrong. Yeah. And they're very stubborn at things, right? So when they're more flexible and when they're more relaxed and open to being coached, I think that's like, we take away all the risks throughout the years. Like, don't pick individual stocks. Don't do this, don't do that, because either I make the mistake, my coach make the mistake, or my students make the mistake. We always feed it back up. Yeah. So we draw a smaller circle and say, when you're fresh, come in, trust me. Trust us on this one. Okay. It's not like we don't want you to make more money, it's because we have seen it. So master the small circle first. And then if you want to expand your appetite, then expand it from there, but learn the core first, right? Yeah. Get the basic first.
So if you had a crystal ball, obviously no one can make real predictions, right? I mean, it's a crapshoot, you know. But what can you expect that the market is going to do? What's the market going to do in the next 12 months?
I mean,
we have a crystal ball. Let's bring it out here. We get a crystal ball.
Okay. I put it on the table here. I mean, it's just like asking real estate, what do you think is going to go for the next 12 months? Yeah. Right? And
I can tell you in real estate, you're going to see a lot of opportunity in the next 12 months. In the opportunities right now. So, to give some context to the listeners, we're sitting in January of 2024. Okay?
Yeah, February 1st.
February 1st. Oh, is it February 1st? Yeah, February 1st. February 1st of 2024. So some of the opportunities that are happening now. The U.S. just announced that they're planning to reduce the interest rates.
Correct.
3 times.
Correct.
This year.
Correct.
And when that happens, in my opinion, because the entire 2023, I mean, I took action, but people were on the sidelines. I think it's just gonna be bigger than it was back in 2020. So that's a prediction that I can make based on past experience, my own experience, and kind of like to foresee what's going to happen in the future.
Correct.
But there's no crystal ball here. And we could be sitting here and, watching this in 2025 and saying, boy, were you wrong.
And there's always chance of that, right?
Yeah.
So the same thing, I totally with you on the real estate side. And guess what? Stock option, when you ask about it, where's the stock market going? Well, if it's the overall market, if it's U.S. market we're talking about, U.S. has been leading the world, strongest monetary policy, strongest army. So I still believe, like everyone's talking about China is taking over. Ray Dalio is talking about China is taking over U.S. dollars going down. I'm like, I don't know. They have their own problem in China too.
Sure.
So far, I think for the next 10 years.
Well, you got to feed 1.3 billion people. I mean.
Yeah, and there's a big gap in wealth, just like U.S., right?
Yeah.
But I still believe U.S. will be the strongest country in the world in the next 10 years. So if that being said, the S&P 500, which is the only vehicle we use for our said and done strategy, has been going up 8 to 10% since 1930. Every year, 8 to 10%. Will that continue to be the thing? Maybe 1 year go down, 1 year go up more, but average out to 8 to 10%. And that's the only thing we focus on. So piggyback on that real estate idea, stock market front run the real estate market about 3 to 6 months faster. Why? Because it doesn't take as much work or money to move. It's just one swipe right, buy, sell. So it's a lot faster to reflect it. So when US come out and say we will drop the rate 3 times, the stock market already start like buying on the rumors. It's like the rumor, it hasn't happened, but the market just shot up like just like a straight shoot.
Yeah.
Now my question is, what does the US say that? Because the US government never come out and say we're going to cut the rate. What if they keep it the same or actually turn it up?
Yeah. Sucker punch.
Yeah, I feel like they were
because they can do it. They can do it because they never said we're going to do that. We're thinking about. They
were like testing out. Maybe just throw it out and see if the economy already got better.
There's a tick. There's just an uptick.
Yeah, just by saying it, they know they moved the market already. So see what people do and wait for 3 months and say, hey, that didn't really help. Okay, maybe we need to drop it. Or maybe it really helped. Like, okay, guys, the inflation is still going up. We still can't control it. We actually need to hike up the rate. I don't think the chance is very low.
Yeah.
But I'm always thinking if that happened, how are we still protected?
Yeah.
Right. So that's why we don't focus on individual things. We just like the whole index. If the market is going up, right, the volatility is a lot slower. Imagine if you invest in the whole US real estate rather than one house in the one county and one city, right? We invest in the whole US. So volatility is less.
So let's address the gorilla in the room. Okay?
Gorilla, okay, not elephant.
Not the gorilla in the room. What's going to happen with the AI, the whole AI industry? Are we going to even know what's going on? Yesterday, I had a whole AI I had a conversation with, I thought it was a human being, but it come after 10 minutes of having this conversation with someone. I figured out I'm talking to AI. Okay. So, AI is coming for the jobs, they're coming for the economy. It's going to be doing stock options, or I don't know. So what is your opinion on the AI situation?
It's actually a very popular question.
And obviously it creates a whole new industry. It's a whole new industry that people are investing in, right?
Correct. And I think AI overall will definitely increase a lot of efficiency. But because whenever we increase efficiency, we're going to reduce a lot of redundancy in any of the jobs. But doesn't mean there's less jobs. I believe if you adapt, there's more jobs.
Well, there'll be new jobs created.
New job created, but you got to adapt too.
Yeah.
Now, as an investor, while the AI stocks are really hot,
is it 98, 99, like the .com?
.com bubble? Is it like the website?
Yeah.
It could be. But I think the human is still moving in the direction where everything is becoming more efficient. Now, I don't invest. I have some Google stocks, okay, not stock advice, but I just think because I pay Google so much money every month, I run ads, my YouTube channel's on it.
Yeah.
My Google Drive, everything.
Yeah. Well, that's a Warren Buffett strategy. Invest in things you use.
I use, So I only invest in things I use, and I can see I pay them tons of money, and I see their financial report, right? But I think AI will be very interesting, and you can't stop it. And my team yesterday showed me a software that they can write something, and then someone talk in my voice.
Wow.
So they sent it to me and say, Cody, can we use this? I never said that before.
Wow.
Like, yeah. Do you want to use it? I'm like, oh, wow, this is scary. But I think don't be scared about it, but learn about it. And there's still a lot of things you can Google and say,
well,
what
the reason I asked
replace?
that, because of the investment, like the economy. It's obviously it's a disruptor. Mm-hmm. Right. And so there's going to be some companies that are affected. There's going to be some winners and losers.
Yes.
Right. And when it comes to the market as a whole, I think that there's going to be something happening. And I was just curious, what was your perspective?
Yeah, to me, I don't really worry as much because I'm a market as a whole. When they become more efficient, means more productivity, more money, the stock goes up. Yeah. So as long as US is leading that AI movement, I'm happy about it because most of my money are in North America. But if individually people are worrying about AI, learn about ChatGPT, learn about any of the more fundamental and mundane job
Yeah.
could be replaced by AI, but utilize it.
Wow.
And if you really want to say, you know what, Cody, I want nothing to do with AI, find a job that the AI cannot do. For example, a plumber. I don't think AI can go in and change out a plumber. Not in the next 10 years, right? Things like that, right? So you can do those jobs if you really like that. But we're like wealth builders. So we have to embrace what will increase efficiency and use it and see what's coming and keep rolling with the punches and adapt to it.
Love it. We learned about stock options. I learned something today. I'll tell you, I finally understand.
Something click.
I finally understand what you do.
You've been having me on the stage. Like Cody's the guy making money out of thin air.
Yeah.
Now you finally understand what the thin air is.
Yeah. No, I want to thank you for coming by. I want to always leave people with something inspirational. And, what's your mantra? What's your mantra? What's your quote? What do you live by?
I'm a boring guy. I read audiobooks a lot. I don't have a mantra. My mom likes to say, where's your focus is where your results. And I'm like, okay, that kind of makes sense. So there's so many mantra, but the way I treat myself with my whole entire team is, guys, treat yourself as the top athletes. If you treat yourself as a top athlete, you treat your body accordingly, you treat your mind accordingly, you treat how you manage yourself or other people accordingly, everything else will be solved. That's why all these top companies like to hire ex-Olympians, ex-people who are top athletes. Why? Because they prove it.
They know the discipline and they know how to take care of themselves and their mind.
And if you can do that, you can do anything. So that's the way I live by. Top athletes, I eat well, I sleep well, I take care of myself, take care of my team, and everything else I can roll with a lot more punches than anyone else.
So all your information is going to be in the show notes. Everybody's going to know how to find you. And I just want to thank you. And, we've had a lot of fun. And even since we met back in, the COVID years.
We were met in Montreal.
We've always had a lot of fun together. So thanks for coming by. There will be a part 2 to this interview. But for now, thank you. And guys, make sure you reach out to Cody if you want to know what's going to happen next with AI. Thank you. We'll see you next time. Let's go.
Let's go. Thanks for having me, man.
Yeah.
Thanks for listening to the Wealth Genius Podcast. If you have a question or comment about something you heard today, reach out to the Godfather via social media or email him anytime. All that information is in the show notes. And of course, don't forget to subscribe so you never miss an episode of the Wealth Genius Podcast. The Wealth Genius Podcast. Until next time, see you at the top.